It is February 14th. Happy Valentine's Day, everybody. And another day. We're Wednesday, so we're about halfway through the week, as everyone else calls it, hump day. And it is looking like it should be an opportune day. As we do every day, we like to zoom out, take a peek at the monthly. As you can see, here we are on the monthly chart. One thing key to note is the close from yesterday, 49.71 quarters, still remains above last month's high, which was that 49.57 quarter, and still above last month's settle, 48.70 half. Now switching over here to the weekly, we can see we narrowly got a cessation of one time framing. The low of the previous week, 49.3775. The low of this week, 49.36 half. So very weak low setting up on this week. Should be, or does kind of tell us an indication of the type of sellers that are in the market, right? Not very strong sellers, at least not very strong long money sellers, as we like to call them. A key thing here is to kind of monitor this low, not really a strong low as far as structure goes, and the odds of it getting revisited are going to be a little bit higher, but for now it's basically telling us that this selling down here is weak. So not necessarily that buying is strong, but we do have kind of weak sellers down here at the low, and we've rallied quite a bit off that level, with the close being yesterday 49.71 quarter, but market trading 49.93 right now. On the daily, you can see we got a gap down yesterday, right? Big gap down, opened lower, moved lower, right? Moved right down to that 21 exponential moving average on the daily, and basically closed just a couple ticks below the open. So for the most part, throughout the day, the market was unchanged. It did trade lower for most of the day before getting that late day rally, which something we talked about yesterday, right? Not really unexpected. We said the best time to probably take a long was going to be at the end of the day, in the last period. And again, I advocate not trading in the last 30 minutes of the period, or last 30 minutes of the day, but yesterday was kind of the exception. So today, or coming into today, you kind of see we're up at 93, so we're up here close to that 5,000 level. So maybe we'll open up on a gap. We still have, about 24 minutes until we open. Yesterday's high, 49.88 quarter. So we'll pay attention to that. And the biggest thing to draw from the daily yesterday, that 49.71 quarter yesterday's close, especially with us probably opening up above value today and looking for play number 2 to get long, is below that 49.71 quarter. It was a negative 4-day yesterday, indicating that momentum traders had been jumping in the market. And this tells us we've got to be very careful if we're taking any longs below that 49.71 quarter, because what can happen is anyone that's fighting against that momentum can be getting off sides, and you can see more continuation in that direction. So you've got to be very careful. We definitely don't want to be short below that, or above that, excuse me. So we're in, a pretty decent spot where we can kind of pick our line in the sand. And if we switch over to the profiles, it becomes even more clear as far as how today will kind of play out, or kind of what we're expecting. A little bit of review from yesterday first, though. So we have our profile here. One second. Why is this thing not working? We have our profile here. From yesterday, you can see that big gap down. In the, obviously overnight session, we opened up 75, filled that previous gap that was here to the upside, and then ended up leaving this big gap. You could see the overnight session trading up just a little bit above the previous day's range right now, 88.25 being the high. Right now we're trading 92.25, so not much of a gap, but still, if we do open up on that gap rules are going to be in play. A very small gap, so the significance of it filling is not quite as important as a rather larger gap like this. We do have a very prominent point of control, which could indicate, and with overnight inventory being 100% net long, there could be a nice correction to that overnight down to that 71, right? And so that kind of sets us up for our play number 2, right? Play number 2, trade back inside value, look for a long. We'll look to trade into this gap. We've got that 5,000 week spot. That's that kind of area we talked about yesterday, 5 to 504. And then last chance here, 16 to 12 is kind of where that ledge is at. So as far as the opportunity goes today, really you have kind of two levels here that are they're real small levels, but you do get that opportunity there to try to get in that. So if we get this pullback back down inside value, and we find some buyers off this ledge, off that 49.80, that target I think would be back towards that 5,000. If we get a little sideways action here and then target this ledge, which is at 45.12, and that's kind of where I think that there's probability of some sellers there. Right, I think there's probably some sellers 16 to 24, back kind of up into that upper distribution of this balance. There is definitely some cautionary shorts here below this 71, I think down to like 68. This is kind of an indication of rejection of these upper prices, and that would be kind of targeting this lower ledge, which is down here, which is about 50, right? If we do see acceptance in this in this lower distribution, then most likely, and this is the lower distribution here, right? Because we have this double distribution look. If we get acceptance in this lower distribution, there's decent odds that we get that trade back down to our previous weekly +4. We've got an untouched settle down there, and you have that larger distribution down there as well. So these are kind of our longer term distributions. You can see here on the side, right, we have a distribution here, and then another distribution down here. You get a little bit of a weak spot there, but it kind of continues lower, and that's kind of where those distributions are separated, whereas yesterday's double distribution is really kind of separated from this green to red. So like I said, we've got this kind of caution look here. The settle really becomes the most important thing today, even though it's in that look. I think it's probably better here to be a little bit patient as far as pulling the trigger early. I think if we do get a push below the settle and it reclaims the settle and holds, that's probably going to be our opportune time to get long. I do think a lot of selling is going to come in early. A lot of people really want the market to go down. They always want the market to go down. So I think they might try to get in there. There is definitely some trapped inventory from yesterday, but that trapped inventory from yesterday, or those weak-handed shorts from yesterday, probably covered into the close, which is why you see the big volume discrepancy between that double distribution yesterday. And the reason I'm using the levels from today, right, is just because we have real big ledges on both of those levels, right? And then overnight session, just builds the ledge even more. You can see the ledge kind of forming there. Distribution, right? This would be a target, because remember, size has to interact with other size. If you're a larger trader, you can't be going down to the mom and pop stores and being like, hey, I'm going to sell you this, I'm going to sell you this, right? You'd have to go to every single door, And, that's just not what these big companies want to do. They want to walk down to the bank and be like, hey, I've got this, you've got this, let's make a deal. Save themselves some time. And as we know, what's the most important thing and the number one thing that you can't buy more of? That's time. So it just makes sense. Besides that, if we do get this continuation and break to the upside, right, if there is no selling here at this 16 to 20 level, then we can kind of expect the gap fill. So let's say you get long on this pullback and you ride it up all the way to the 12, you take profit, the market starts to kind of dance around. If you don't get any of that rejection, well, there's another opportunity to rebid and take this thing up towards that 33, close that gap, and you can see kind of where these distributions, see where the weak volume kind of sets in up there. So don't be surprised about that. The key thing that you're going to want to pay attention to today, obviously, is going to be tempo. Market catches an offer, fixes overnight inventory or corrects overnight inventory, and starts to kind of dance around. Well, that's going to kind of give us that opportunity, make whoever's short from yesterday still want to cover. But if it just comes down and starts to continue down, you might have to just kind of force yourself on board. The nice thing, like I said, is that you've got that settle as your kind of line in the sand. The separation between this double distribution, yesterday's half back about 62 and the prior month high, I guess would be like your very, if you're being brave, your very last stopping point inside the prior month's high, or inside the prior month's range, below the prior month's high, you probably get some increased odds of liquidation. And then last but not least, like we talked about, is our COT chart, which was complete from yesterday, is this area where we're kind of assuming that selling came in, right? Well, it kind of came in around the same area. You see that move down. So, and we closed below it, right? So that's one close below it. Like we've talked about, if we continue to get closes below it, that's increased odds of the market moving lower. Now, the market moved higher in the overnight session. So we're like, well, it's closed below, but it's over high, blah, blah, blah. It doesn't matter. That's not really as important, right? Remember the 4 data points, and I've broken this down to be very simple. And if it seems too simple to make sense, that's why it makes sense. But there's 4 data points that pretty much everybody's looking at every single day, and that's the open, high, low, close, right? The open, high, low, close of the daily. So if we continue to get closes below that level, the market starts to kind of warn us, maybe not everybody else, but it starts to warn us that the market's getting a little bit heavy and may need a deeper pullback. And that pullback would be coming to that 4,900, 4,875 area. Why? Well, we've talked about on previous COT charts, because that's where institutional buying has been in the past. And so that would be our first stop. We're starting to see some institutional selling, I think, here, right? Or at least liquidation from there. And so that's going to be something that we definitely want to be paying attention to. Of course, we don't get the data from our COT report until Friday. And then remember, Monday, we've got the day off. So the short week next week, there may be some people that need to shore up things before that long weekend. As we know, there's still 2 wars going on. There's still a big debt crisis. The odds of rate cuts are changing, right? They're not expecting any rate cuts until July now. We've gone from 6 in the beginning of the year, now cut down to 3 rate cuts this year. And Powell and the rest of his friends over at the FOMC continue to say it's all data dependent, which is basically saying they're not going to cut rates. And we've been talking about this, right? We don't think rates are going to get cut, but the scenario remains to be seen, and we just have to continue to react to the information that we're given. But other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.